Good turnaround Tuesday, everybody. How are my trading warrior brothers and sisters doing today? Everyone doing all right? Howdy, Sean. Okay, well, I don't follow the news a lot, but I'm guessing there was some news that was a bit negative about the trade war because here's your trade war monitor. Here's your heat map for the trade war. And there was a possibility for a few days, even though there wasn't great symmetry of a right shoulder, but I've been contending that it's an incomplete pattern. Anyone want to guess why I think it's incomplete? Hi, Zolt, Kevin. Any guesses? One, two, three. Oh, that was a hint. Okay, because I think there's a third drive coming here. And I think that risk is going to have trouble until we complete up here. I really want to congratulate Steve Volge. Yesterday, live during the session before we got there, we were probably trading in here yesterday morning. Let me quote Steve. 2960 will be a good area for a short for at least a trade. So here you go, 40 handles, free call by Steve Volge. Let's see. He was off by 0.4. I was 29.60.40. So, man, what a value you guys get for free in face. Anyone take Steve's idea? Besides applause, you took it? Well, congratulations, Sean. Anyone else? That should pay for your sub. Jane took the NDX. Congratulations, Jane. So, I mean, just that one trade should pay for a year of subscriptions. I'm pretty sure Sean and Jane both are. Okay, beautiful. We root for you, and you guys capitalizing, or as Blake says, exploiting the market. Um, we're as happy for you when you do it as we are in our own accounts. So nice work. Are we going to new lows? I think that's going to be. There is a possibility that we hold, and then we get another one of these from a higher low. Too soon to tell. Something else I talked about yesterday that is coming home in spades is a euro pound. So now we're getting to a level where I'm thinking about shorting it. Okay. Here's your daily. So this is about a 500 pip break. So 2.5 back would be 90.5. 91 is going to be about 61.8. So this is zone. I'll start looking for shorts to look for something like that from up here. Premature, but felt this was not enough of a correction, and that's what's manifested. Let's see what else. Japanese yen. Although we're coming off, we're still above yesterday's low. I'm looking for this level 106 with risk off, and yields, even though they popped yesterday, they're lower today. We're still on the verge of new lows in the 10, maybe not as much in the 30. And I would use this yield weakness if you're not a bond trader to look at this TLT as a potential failing rally. There's a gap right here at 146.48. We'll fill it, risking the highs, thinking that we could get an ABC. Steve showed a chart last week, and bunds actually looked weaker than the U.S. 10-year. So as the bonds led the bond rally, perhaps they're going to lead the correction as well. But I think TLT is a potential short up here, risking the highs, looking for maybe equality that could take us down to 132 or so. So that's something I'm looking at as well. And we have a very important test coming up in crude oil, especially if we take out this low 50-50 for the big descending triangle. I actually think that there's a chance that maybe we just flush out this low and hold it, and we still get one more pop if the S&Ps don't completely melt down. So that's something else that I'm considering. And the metals, of course, with the yen, US dollar yen under pressure, we're getting a decent pop. I was looking at gold last night, right here, and thought I'd have a chance this morning. But I saw, yeah, this is it. So I saw 1 and a 2 and thought I'd have a possibility for a 3 here, but happened while I was having sweet dreams. Not sure what to do up here now. I would say that when the yen bottoms, you could be looking for if the yen bottoms, okay, which there still could be another 80 pips to the downside. I'm not just going to jump on the yen, but it is my contention that we could end up holding these lows. Somewhere down around here. So the metals probably still have some more upside left in them. And I'm not sure about the order. I thought Blake was going on vacation, left today, but I heard on Skype he's here. Are you here, Blake?
I don't think so.
Oh, okay. Hi, Steve. I if you'd like me to just, you know, build.
My error, sorry, my mistake.
Okay. So, Steve,
So
do you want?
his mistake. He's the one paying the bill.
Oh,
There you go.
okay. All right. So, if you want to take over, fine. If you want to keep working on what you were working on, I could field questions up to
No,
you.
it's okay. Things are in motion at the moment.
Okay.
So I'm here and I'm gonna cover stuff. And Paul is gonna be with us as well.
Great call on S&Ps yesterday, Steve.
It was
you
easy.
were talking 2960. People had
it was
2 or 3
easy.
days to prepare for that area.
It was easy. I mean, it's not the first time. You are more than experienced. It's not the first time that we've seen again and again and again that when an area is important as support,
yeah,
it most often will play a role, even if temporarily, as resistance afterwards. So it's not that I invented the wheel or you know the fire or something like that.
Okay, crappy call.
No, I mean.
All right. Look, okay, anyone could have done it.
Yeah,
everyone got short at 2960.
I hope so. At least those that were listening in, it was definitely a good entry area. There is no question about it.
And it's already completed, in my opinion. You said whether or not it's a move to new lows or not, it's good for at least a trade. I think if you take 40 handles out of the S&Ps every week, you could choose any island you want to live on.
That's not bad indeed.
Yeah,
that's not bad indeed. Stelio,
anyway,
we missed your voice yesterday. Yes. Thank you, Coach. So before we go in charts, what do you say? You give us an update of what's been happening around the globe.
Yeah, they got on the pound still. No deal again, or? Huh?
You missed my squeaky voice. I will believe that. So let's start with the pound because you mentioned it. We had basically Angela Merkel making a comment that I think it's not word for word what she said, but she said basically that it's at the moment extremely unlikely to reach an agreement as things stand. So that is that's not good, and it also goes against Merkel's recent attitude and recent talk She has been always very constructive, and let's see how we can work this through. And now this pretty negative headline, and also coming from her, is doubly negative. So the pound doesn't like it at all. And remember, we're what 3 weeks away from the deadline, and so this is becoming now very important. And it's either going to be hard Brexit or some kind of a resolution, which I have no idea how it's going to happen. But at the moment, it seems unlikely, and the market thinks it's unlikely. So let's brace ourselves. The other important thing was, like you correctly said, Dale, in the beginning, there was US-China developments. Actually, last night after the market close, there were some positive, well, at least they seem positive comments from the Chinese side, something to the tune of, we're ready to make compromises and make a deal and, make things work. So the market's kind of jumped. And then there was an announcement that the US has blacklisted 8 Chinese companies, tech companies, including, actually, I don't know it, but one called Hikvision, which is supposed to be, no, Hikvision is, it's a pretty big company. Anyway, they are just continuing with their, they blacklisted 8 big companies. So this is definitely not showing signs of willingness to basically negotiate, right? So China responded and they said, stay tuned for retaliation. So, this is not de-escalating, is it? It's more the other way. So
it's like Brexit. People hope, and then hopes are dashed. People hope, hopes are dashed.
If you play back one of our recordings of, I don't know, 6 months back, I'm sure we're talking about the same things and saying the same things, apart from the names of the companies or whatever it is. It's just
let's do that.
Yeah.
And replay it.
It's keeping us busy, but at some point you just get tired of it. So
yeah.
I feel sorry for the Brits, because they have to actually live with whatever the result is. But on my side, I just wanted to end one way or another.
Yeah.
So and I want to send my kids to university in the UK, so I hope it doesn't end a bad way. So what else? We have.
You have a heart for the UK.
I love the UK.
You have some good memories in your memory box of the UK.
He mostly loves the weather.
Yeah.
Sure. Really?
I lived.
No, God, no.
It's terrible, huh?
Most of my adult life I've lived there, so I just love the Brits. But let's hope it turns out well. What else is there to say? Data-wise, we didn't have that much anything of interest. We do have PPI in just over 15 minutes from the US, which will be important. Because remember, last month it beat expectations by 0.1. It's not a big deal, but let's remember the way things are. The Fed and Powell are kind of indicating that, this is not a proper cutting cycle. We're adjusting. We're not going to be slashing rates. And the market's pricing almost fully a rate cut now in the next meeting. So something's got to give. Either the Fed's going to turn and say, look, this is really becoming a problem, or the markets have to start pricing fewer cuts. So we'll know soon enough. And PPI, CPI, these are numbers you really want to watch out for, obviously along with the random non-farm payroll number every month. So we're getting close to, like I said before, we're getting close to another Fed meeting, which should be very important. We were saying this about the previous one, and it was a bit of a dud. So let's see what happened in that. Otherwise, it's been pretty quiet. There's been nothing exceptional. We had some numbers out of Germany today. Industrial production came in slightly better, a little bit better actually. Revisions a little bit better. So you get the odd ray of light out of Germany, but overall, I think the trend is still pretty negative.
Thank you, buddy.
And that's really it. The other thing which I've been thinking about quite a bit recently is oil, and the way it's been so volatile. And I have friends who ask me, what do you think about oil?
Finish up with that, and then I'll take you back to the Brexit situation, because I wanted to ask you a couple of things. But go ahead and say what you want to say about oil.
I was just because I was having this conversation with a friend of mine yesterday. Actually, he said, "What do you think about oil?" I said, "Look, oil has 2 big forces driving it. One is supply driven by the shale producers. They were the tipping point, and they just drove the price down from from over $100 to, what was it, 35. And then you have and basically as oil price goes lower, as it gets towards 40, 45, these guys, they stop being profitable, so they start cutting production. And shale producers, they can't just stop and start within a day. It's a very long process. So as we're now going back towards 50, this effect is already happening. You can see rig counts going lower. So that's one thing. So as the price goes down, you have this stabilizer, and it will limit supply automatically. And on the other side,
because some of them are just not profitable below
and
price,
they're hugely leveraged on debt. So they're lucky that debt is still relatively cheap, although for them it's probably not as cheap. But so you have this stabilizer, and
who knows? Perhaps Federal Reserve can extend their courtesy in buying stuff, directly for them. Who knows?
Yeah. And you have the OPEC also, who they're gonna restrict production or increase it as needed. So that limits downside. And then on the upside, as you get close to $70, $80, what do the producers do? They go in and they hedge. They hedge the forward production. They put in a natural resistance to this. So you have
because they're scared from the latest, from the last few years dips towards like 25 or whatever.
Yeah.
So whenever they can get a $70, $80 crude price, they think it's a good idea to hedge it. And until at some point it's going to stop being a good idea to hedge it, because the dollar might be taking a huge stumble. For example, many don't remember that theoretically we had like an oil crisis at some point in the 70s as well, but that was due to dollar losing 2/3 of its value and not crude actually going up in real terms. So who knows? This might happen again, right?
Yeah. So
you mean the embargo, Steve?
Which point are you talking about now?
Well, the oil in the 70s, there was an oil embargo. Was that because that wasn't because the dollar was weak? That was just a political thing.
That was
right?
political.
It was a political thing, but don't forget that they were trying to blame, besides everything else, the increase in oil prices, in gains from OPEC, etc. But how can you get, because very well the huge bear market that followed the 1971 unpeg from gold.
Exactly.
So how can you blame anything that is priced in dollars going up when dollar lost like within a decade 2/3 of its value, right? I mean, what do you expect to happen?
What they want, Deutschmarks instead back then? Because we didn't have a euro, so
we definitely didn't have a euro. I'm assuming Deutschmark would have been an excellent choice, but I wasn't alive.
Yeah.
So
rub it in.
I'm not very sure.
And when you're talking oil, don't forget the Clampett effect.
What's the Clampett effect?
You know about the Clampett effect?
No.
Jed Clampett of the Beverly Hillbillies?
No, I don't.
Okay, you guys are so young. All right, go ahead.
So basically, I was gonna close by saying, my friend said, "So what do you do with oil?" I said, "Look, I'm buying 40 to 45, and I'm selling 70 to 80." So he says, "Okay, well, that's a pretty big, channel to knowing." I said, "Well, I'm not looking at short-term moves because these are driven by, attacks by drones or statements by OPEC and this and that. It's just too crazy to."
I mean, the most recent example, we just had it like within the last 3 weeks. We've seen at some point an intraday move of like 20% higher, and now we've whatever it was, like 15% or whatever it was, and now we've seen that whole move having been retraced and more. So yeah, absolutely, Stelio.
Yeah,
that's what I said yesterday as well. I mean, we're in a broad triangle. I mean, it has quite a broad range still, and
we're getting closer.
I know it's not very helpful for those that want to trade in the very short term, but anything in between for the time being seems to be noise, right? I mean, big noise, but noise nevertheless.
Yeah, I agree.
Would 100%. You try and bottom pick it here, Steve, and use stop under the breakdown about 50-50?
Not easily, Coach. If you remember, I was saying yesterday that the move towards 54.75 should find resistance. We stopped a little bit
before that.
Yeah, but big rejection yesterday, right? I mean, we were very positive at some point in the day, and we ended up closing by leaving behind let me take the screen, by the way, by leaving behind a shooting star, which, you know, it's not a good sign if you want to be long. So here it is, since we were talking about crude. But Stelio, I want us to go shortly back to Brexit, because I have a couple of questions for you before we go to chat. So here it is. And we're, you know, yet again, pushing near the lows.
There.
Keep in mind, 51.50 is the 61.8% fib, and 50.5 is the double bottom, let's call it. It wasn't a double bottom because we never triggered it, but it was the previous lows we found intraday was at 50.5. So obviously, you know, trying to sell near the 61.8 and near 50.5 doesn't make much sense. So I would rather be buying, you know, a reaction from 50.5 if we find ourselves there. But in the short term, yesterday's rejection and today's continuation, they look like crude is still under pressure, and it looks like we might actually end up testing that 50.5 level. So it's like $1.50 more to the downside. Why not? I mean, we can easily move that much within a day, right? I mean, which could do crazier stuff than that.
Thank you, buddy.
So Stelio, my pleasure, coach. So Stelio, the question here is, I've been reading so many rumors that Boris Johnson might resign on the 17th, so he forces, in essence, a disorderly Brexit. That he's offering rewards to governments that might reject a postponement request from the UK to postpone Brexit for.
Really, I didn't hear that, but that's really pathetic.
No, I did read it, yeah. And you know, like I've read like 4 or 5 different scenarios. Most of them have something in common, that Boris Johnson has not given up in the idea of forcing a no-deal Brexit, and that he's considering like several options to actually do that. What do you think, by tracking the situation closely? Do you think that's the case, or that he has capitulated and legitimately he's going to go ask for another extension of the Brexit date, and we see what happens from there?
Well, first of all, I think he's very unpredictable. So any kind of guesswork that I have to do on what he thinks is just guesswork. So I can only speak with what I've read and heard him say, and he did say that he's open to making another extension, and he said that officially. So I don't.
Is there any chance that he's saying that to say it, and you know, in the background, as I said, he's working on a method to sabotage actually that? That's the big question here.
Anything is possible, man. I really, with this guy, I really don't know. And I mean, I don't know is the answer, really. So any scenario is possible. I'm sorry, I can't be any more precise.
No, I understand. I mean, we are in uncharted territory. There's no question about it.
And
whoever claims differently.
And I'm not that, you know, I've been alive for, 48 years. I've seen quite a few politicians come and go. And I have to say, this latest generation of politicians worldwide, they just baffle me. I don't get it. You know, they are not the same politicians like from 20 years ago. You know, they have a different way of talking, a different way of doing things. You know, look at Johnson or Trump, you know, when he tweets, it's crazy. So I really don't know what to make of them. I'm sorry. Any scenario is possible with these guys. So, but you know, from what he's been saying, he says he's open to an extension. He doesn't want a no-deal Brexit. He said explicitly, I think going out with some kind of agreement is the desired scenario, but he will not hesitate to get out with no deal. And that I understand. I would be saying the same thing, you know, just to show that, look, you have some options and some weapons. But what could he be thinking behind? What could his strategic team telling him? I have no clue. I really don't. Yeah. I don't think anybody does, apart from them.
It's to be honest, it's a good question. Now, speaking about comments that are related to macro stuff, Claudius says, I read the Norwegian fund firms have exited oil sands investments, sold about 59 million worth of stock, probably because we were talking about crude. He's making that comment. Nick says, I can't believe Germany will allow Hungary or anybody else to veto an extension. I would agree with that, Nick. So yeah, if it was only just a country like Hungary, that would be considering that. Yes, I do agree that the rest of the Europeans, will not let them trade, whatever, to break. If it's a common agreement between everybody else that they should give the extension, then yes, they will not allow like a small country to vote against that. I'm totally with you there. Boris will be trying not to rule out no deal. These are just ways of him giving himself more leverage to get a deal. Yeah, although to be honest, if he really wants to get no deal, I don't think there are too many options left on the table for him to achieve something like that. I mean, so it's going to be interesting to see. There is a friend here, Jason, who is asking us to explain gamma and convexity. I'm not sure this is the place to do that because it's quite elaborate and most people will not be able
just go to Investopedia or something like that. It's
to follow that conversation. It's an interesting question. I mean, and we can, at some point we can have a webinar. Since you're talking about gamma, we can have a webinar about options, for example. That we can definitely do. And having to do with convexity, we can also have like a webinar about bonds and how bond instruments work in finance. But they're more elaborate. So I would rather have those discussions when the audience is purely there, for that kind of a talk. You know what I mean? Okay. So let's go back to the charts. So I'm going to start by two things. The obvious, Coach already mentioned it. We got that nice rejection from the 61.8% fib and horizontal support resistance area at 29.60. I mean, it was quite easy to assume that some type of a reaction would happen from there, even if that would end up being temporary, since we know 29.60 was key as resistance. Once we broke above it, support several days in a row actually before we finally broke down. It acted like 4 or 5 consecutive days of support, and then when we finally managed to break through it, we had no reason to believe that it's not going to act as resistance once again, especially since fib extending to the low that we found, that same exact area ended up being the 61.8% fib as well. So nice confluence of resistances there. It has done its work for now. So if you took that, you are already in the pleasant position of having to manage something that is profitable. So in my opinion, depends on if you think there's going to be follow through. You can take partial profits and move your stop loss to break even for the rest, or just move your stop loss to break even from the rest. If you're really bearish and you don't want to, reduce your position size, you can just, make sure that you have no risk on the table anymore. So that's totally up to you of how you want to handle it. I want to remind you though that despite the importance of the rejection, there is still a very key technical formation here, which we haven't yet violated. And that's the one you see with purple here, the purple thick lines. It's an ascending wedge, right? So it might end up breaking to the downside. It might end up breaking to the upside. Of course, I would rather see it break to the downside because, as we were discussing yesterday with Dale, such a formation can produce a break to the upside, and that just ending up being some type of an overthrow. So I will have a lot more confidence in pushing on a breakout to the upside than to the downside, because I really believe, as you see, we temporarily intraday twice pushed below this formation, but it was intraday, and we actually found support at the confluence of a triple confluence of supports here. Actually, it's the 61.8 of that last move higher, horizontal support resistance area. And as you see, the 200 daily moving average has
we
also...
sorry to interrupt, we have numbers in 3 seconds, PPI.
Which is, I think, Stelio, it's, yeah, PPI, there we go, thank you.
Minus 0.3 versus 0.1.
Whoa, that's
versus,
much weaker.
Yep.
Yeah, that's much
So
weaker.
this is going to give some ammo to Mr. Powell to slowly.
Oh yeah, let's see how the market is going to react to that, because that is definitely, as you see, the dollar is already moving lower. Here's the DXY on the bottom right. Euro USD is catching a bid. Cable still remains very much under pressure. We see a reaction higher. It makes sense that the market is going to consider that an extra reason for the Fed to push on with rate cuts, because of course they always focus on whatever number is weak. I have to admit though that it is a much weaker number than what the market expected. I mean, it's probably one of the worst misses I remember having seen recently, having to do with inflation data. PPI, of course, is producer price index, so it doesn't immediately translate to any change in the CPI, but usually it's a leading indicator, because as you know, I mean, producer is gonna, transmit whatever price differences sooner rather than later to the consumer, especially when we're talking about positive price changes. Okay.
10-year, Steve, 10 years, 2 bips above the low that we had at 150 before we rallied. Oh,
there we are. Let's have a look at it, Coach. There we are.
Yeah.
Here it is.
Almost there.
Yeah, almost there. You're absolutely right. Almost there. And as it seems,
is the Bund, I remember last week you showed the Bunds on this news. Do we have a failing rally in Bunds? Oh, wow.
No, but I'll tell you what we might be having here in Bunds, because I was looking at it yesterday as well.
It's so much weaker than the U.S. It makes me think, look, it led the way up, and I think it's going to lead the way down.
Might be, but this looks to me like a triangle, Coach.
Yeah, I like that.
So in the short term,
a little more upside.
Yeah, I think that's what we might get in the Bunds, what I'm showing you here. So
right.
Something like that looks like a one leg higher,
right.
one more leg high, unless, of course, we see that the next leg higher that begins being very impulsive in nature, in which case,
new highs.
We can then be talking about new highs here as well. But so far, as you said, there is indeed a big divergence lately between what the Bunds have been doing and what the treasuries have been doing.
Yeah, show the 10-year. It's not even close to that.
Having said that, as you understand, that would, if it persists, that would translate to a rebound in the Euro USD, right?
Right.
So if this divergence persists, it is very likely that it's going to lead to a rebound in the Euro USD. So that is indeed something to pay attention to. Yes, and by the way, the 10-year yield, as you see, is almost at 1.5% yet again.
Well, I'll tell you that break in the Bund that you showed, if that's not an impulsive decline from the high,
it was.
I've never seen one.
That's why I find it very hard to believe that there shouldn't be at least one more leg lower.
Right.
Because an ABC. An A can be an impulse, right?
Right. I didn't know that.
Yeah, that's the point there. So
I learn from you every day. Who else learns from Steve and Stel and Blake every day? Raise your hand.
I learn from Steve and Blake every day, and you.
I learn. You're either growing or dying, man.
Son, by the way, is posting an inappropriate joke every day. I enjoy every single one of them, but sorry, I can't transfer them. I forgot to tell you about yesterday's. Okay, so the DXY, as you see, more or less is stuck here, right? I mean, it's stuck. I mean, we're still above this ascending trend line support.
It's like an EKG of someone in a coma. That's my EKG you're showing, buddy. Yeah.
I want to believe you're far away
My
from
brain
that.
waves. There they are.
So the DXY is still stuck here. Let's see what the USD yen has been doing as a response. By the way, the USD yen is, you said it earlier, Coach, it's pushing lower today again, but still remains above this confluence of support. So I have to say that still this 106.50 area remains very critical to determine what's the next move for the USD yen. I mean, yeah, we had a nice potential double top formation here at 108.50, but once we broke below that low, we didn't manage to get continuation, and that is very, very troubling. That is why I believe that Blake is considering a very likely scenario for the market to want to move higher, kick out everybody that's short, and then perhaps another leg higher, then turn lower and push. But 106.50 is going to be important, and it's a confluence, it's a triple confluence of supports, and I think that unless we see what happens from here, it's a little bit of a coin flip what to expect. Now, having to do with crude, we already discussed that, but let's have a look at the metals, because I'll give you a freebie since now it's on its way. Grega already believed strongly that they bottomed, right? He has already put a pattern in play. If you're a premium member subscriber, you already had the opportunity to take advantage of this trade idea. It's already almost 1% in the money, as you can see here, 0.88% in the money. So he had a high conviction that we have bottomed. I have a high conviction that the long-term direction is higher. There's no question about it. I still have a moderate conviction that we have bottomed. It looks likely to me. I like the perfect way in which this move lower has channeled. I have to tell you that. A break above 1520 would give me the final confirmation, because I believe that a break above 1520 is going to take us extremely easily to 1586, which is longer term 61.8% fib. You can see it here. If I zoom out substantially, you can see it there. There you go. Right from the all-time highs to the low that we found at 1046, the 61.8 is at 1586.71. So I think we're gonna very easily make it there if we clear 1520. Now, the fact that we back tested twice, 2 consecutive days, today included, this 1490 support area, and we held, is another indication that indeed we might have already found a low here. Okay, so if you really want to jump the gun, but you want to keep your stop tight, I think that you can use today's low. Of course, as you understand, the more you want to tighten your risk, the higher the possibility that you're going to get whipsawed out of the market, even if you're in the right direction. So there is always in trading, there is always a trade-off between how much risk you're willing to take and the possibility that you will have chosen the right direction of the market, but you'll still find yourself getting stopped out before the market actually moves in the direction you were envisioning. Same here, by the way, with silver. As you see, those horizontal support resistance areas have been drawn out here for long time. One of them is 1725. We tested that the day before yesterday, which in essence was Friday. I mean, 2 days ago in trading, which was Friday. We tested it again today, and we seem to be moving higher from here. I would get a higher conviction if we clear 1780 to the upside, and most importantly, of course, if we clear this descending trend line resistance. But as you see here on the chart, I haven't changed anything in my drawings. I drew several days ago, perhaps it was the week before the last week, 2 weeks ago or something, that there is a very likely scenario that we're going to see a move towards 1670 and then continue to new highs. We actually stalled a little bit shorter than that. We stalled at the 50% fib at 1695, that area. And above 1780 and especially above $18, I think we can find ourselves back at 21 quite easily. 21 is a previous high. If I zoom out, you can see it there. There it is. So 21 is a previous high. I think we can find ourselves at 21 sooner rather than later. Obviously, the Fed at October 30th is going to play a very, very important role. Of course, if for some reason we see some kind of a surprise from them, let's say 50 base points cut or 25 base points cut, and a direct mention of openly restarting QE, because if you were here, I already explained that they have started quantitative easing. Doesn't matter if they do it through the repo market, but one thing is for sure, the Fed's balance sheet has already been inflated by more than 180 billion within 3 weeks. And just to put it in context, the third round of quantitative easing, which was the largest one, involved buying of 85 billion per month. And now we know that during the past 3 weeks, they've had to throw in the market to monetize, in essence, almost 190 billion of debt. So the pace of which this function is running currently is something like 2.5 times larger than what we had as QE3 in the past. And as I've told you before, it's more than obvious by reading the articles that whenever they officially restart quantitative easing, they're not going to name it quantitative easing again, because initially they wanted to give a nice name to debt monetization that is not going to be called debt monetization, because Bernanke was swearing in Congress that that's not what they're doing. It's something temporary. So they had to, to find a nice sounding name. Quantitative easing did the work just fine. But now quantitative easing also has a stigma behind it. And what is that stigma? It's the operation they had to use, according to what they say, for when the economy was at the worst possible point after the Great Depression of the 30s. So, by naming a new operation again quantitative easing, it's going to be like they're openly admitting that the economy is back or is on its way back to a very dire situation like the one we had in the financial crisis of 2008. So since, they don't want to associate whatever they will be doing with an economy that is on its way to the 2008 financial crisis, which probably it is, but it doesn't matter, I'm pretty sure that they're going to name it something different, like, I don't know, unicorns can fly or something like that, something that will sound sexy. Let's see what questions we have. These are repos. Yeah, they are.
I already know what they're going to call it, Steve.
What are they going to call it?
WTF money.
Yeah.
What else can we do?
These are repos note purchases, increases in balance sheet is only... No, you're wrong about the increases in the balance sheet, mate. The balance sheet had reached 3.77 trillion. And last week when we got the data, it was back at 3.94 trillion within 3 weeks.
Is Stelio still around?
Might be.
I am. Hello.
Okay, Stella, I have a question. I've been trying to get good answers from people. And I know you used to do a lot of trading. I mean, LIBOR was an overnight rate, right?
Stelio's made a killing, actually, when we had the LIBOR.
So what do you think is happening in the U.S. repo market? What it is not just a corporation having a big tax bill that is causing this illiquidity. What's going on there?
First of all, Coach, initially they said that would be an issue that would last for 2-3 days.
Yeah.
And we've already entered the 3rd week.
Yeah, that's what I mean.
That they have to intervene constantly.
It's a problem.
Of course it is. Of course it is.
Well,
no one's talking about her.
Remember when we first started talking about this, and you asked me on this webinar, what do I think? And I said, look, this can happen, but it should be temporary. If we're talking about this next week, that's what I said at the time, then there's an issue. And I think there was a nice little explanation, a very suitable explanation that everybody gave about the corporate tax day, and there was bond redemptions that day. So that took out liquidity from the system. But the way things are right now, there is some problem in the background, which we don't know what it is, but there is some problem. There is a need for liquidity from someone. Is it a bank? Is it, I don't know. Yeah, it must be some, it must be a bank, or maybe 2 or 3 banks. I don't know. But I was saying a couple of weeks back that we saw this. I was sitting very close to the repo traders when I was at Merrill Lynch. We saw this happening in 2008 when the crisis started, and they were flashing the red lights before everything else. So theoretically, this should now be a problem. It should be,
because it didn't last for 2-3 days. It's still an ongoing issue.
And you know also the narrative, guys, is that U.S. banks you don't have to worry about anymore. Europe didn't take care of any of their problems after 2008, but the U.S. cleaned it all up, and there's no systemic risk with our banks. And if these are banks that need money that much that they're going to pay up like this for overnight funds, there's a liquidity crisis brewing.
Well, one thing's for sure, after the 2008 crisis, there was deleveraging and de-risking within the banks. But you know how it works. I've seen it with my eyes. When things look like they're safe, let's say safe in quotes, then senior management comes down and they say, right, how can we make more money? They always do that. No, I remember my target was always increased every year, even though nothing changed in the business model. So, how can we make more and more and more? And they will find ways, and initially they're okay ways, and then they're going to start stretching things, just like they did with CDOs and all these products that nobody really understood. So I fear
I wonder what they went heavy into this cycle that they're vulnerable on. Corporate debt is the biggest monster, according to people like Gunlich.
And student debt as well. Debt in general is a monster, and I fear that the 2008 crisis didn't teach us anything. That's what I fear.
Student debt is not a problem. They're going to forgive all the debt, and everybody's going to be going to colleges and universities for free, and it's going to be a magnificent. A magnificent
I thought you were being serious there for a second.
I'm glad I have a passport.
You know something, a lot of people don't realize, wherever there is a government hand intervening, and that of course doesn't, I'm not talking about the US.
So that's everywhere.
Wherever
the whole
there is a government hand intervening, it's a trend that I've seen it repeat so many times that it's not even fun. I mean, you can with 100% certainty predict how things are going to be. The government thinks that it finds a problem. So then they put a program in place to correct the problem. You can be in advance 100% sure that the problem they're going to try to fix, they're going to make it in very many different ways so much worse, that then what's going to happen is that they're going to, admit there are 3 more problems. And, for each of those problems, they're going to try to administer a solution, a medicine as well, for which each of the 3 new problems, they're going to create 3 new problems. And that's how government multiplies itself. And in essence, crowds out productivity, productive investment, etc. That's what happened with colleges as well. Coach, I don't know if you know it, back in 1913, you remember that everybody is talking about Ford and how Ford was paying workers like, extremely well. And
so they could buy the cars.
Yeah, that's what they said. There is no businessman that pays people very much so they can buy his products. The reason he was doing that is because
you guys pay me enough to subscribe.
Building a car back then, as you know, had mostly human labor in it. and getting trained in doing that job, it was a long-term process. So if you didn't pay enough your workers, for which you had to spend a lot of money, a lot of time from other experienced workers to train them, and that person actually ended up going through training and then leaving because he didn't like the salary, as you understand, in essence, that bear a huge cost for the company itself. So the main reason that Ford paid very well his workers, besides the fact that they were very productive, that's true, and that explains also. We know that salary increases happen because of productivity. If you produce X amount, then you can actually ask for more money, right? So the main reason they were paid well was that. Do you know how much they were paid, by the way, in 1913?
No.
$5 per day.
Wow. Yeah.
$5 per day.
Money.
Do you know how much work was required from one of those workers to send their kid to Harvard?
20 years.
3.5 months of work was enough to send your kid back then in Harvard. 3.5 months. Do you know what's the equivalent today?
No.
3.5 lifetimes.
3.5 years work.
Wow.
To send your kid to Harvard.
Joe was right. They wouldn't hire me. I was 16. Joe said I was there in 1913. Yeah, Joe, I was 16 and Henry wouldn't hire me. Anyway. Yeah, I remember 1913.
So what do you think happened in between?
World War I.
Why do you think we have such a high inflation having to do with education prices in universities and colleges? Guess what? Government subsidies.
Yeah. Right.
A big part of it is government subsidizing the thing. And when universities and colleges know that the bill is being footed,
they raise their prices.
Partially by the government, and students can easily say, oh, come on, anyhow, I'm going to get a loan for that and we see what happens from there. It's much easier for them to take the decision to go and study in college or university, many of which kids should not be wasting their lives taking degrees that have no real value afterwards, because many of them don't even end up
with jobs.
With jobs that are relevant to whatever they did. So you are old enough to remember that back in the days, there were a lot of people that were making a nice life for themselves without going through college or university, right? And there are a lot of jobs. There are a lot of jobs that you actually don't need a university or college degree to do.
Like this.
Yeah.
Yeah. So all the masters and undergrad degrees that can't find jobs end up being traders.
That's a good case scenario, actually.
Yeah.
There are much worse case scenarios.
Yeah,
but okay, whatever. Yeah. So government subsidies and government getting its hand in. As always, stupid policies begin with good intentions. Oh, isn't it nice if we send all kids to college? No, it isn't actually, because not everybody's meant to be in college. It's not a bad thing, right? It's not a bad thing. And in many cases, as you very well said, it's much preferable if you learn some skills on the job doing other stuff than go to college or university. I mean, to be a proper human being, you don't have to finish college or university. Right.
And it's true, Steve. After college, I had a BS in journalism, right? I couldn't find anything. So I ended up being a runner at the Chicago Mercantile Exchange. So my degree did not open the door, is my point. And that was a long time ago.
Yeah.
So, yeah, it's worse now.
Yeah.
At least there isn't even a floor to go, be employed on anymore in the business. So anyway, I'm glad I went there. What a country club.
I'm actually sure. I think you should consider writing a book at some point.
Yeah. Okay.
No, I mean it.
Everyone tells me that.
I'm pretty sure it would be very interesting.
Historian. I just by living as long as I have, I'm and
Tell me
historian.
Were mammoths as big as we see in books?
What? Or what? A mammoth?
Yeah.
They were hairier, woollier, man.
Okay. So let me cover Euro Kiwi, and then let's see what Paulie has to share with us, because we already took much time. So Euro Kiwi, we had a question about Euro Kiwi. Listen, the situation with Euro Kiwi is quite straightforward at the moment. I mean, look at this symmetrical triangle, right? We already know that this trend line resistance is significant. Let me actually make it a little bit better. There we go. We already know the significance of this trend line resistance. You can see how many times we have tested it during the past several weeks, right? You can see it here. So things are, quite clear. As long as we stay below that trend line, and if you want to look at it as a horizontal range, look a little bit higher, let's say 176. As long as we stay below 176, we remain range bound in this range, which extends from 171.50 to 176. So in my opinion, there is not really anything to do here that's not a coin flip, as long as we trade within this range. Now, if for some reason we break above 176, I think that's going to be a nice buying opportunity, because I'm pretty sure that there's going to be continuation higher. On the other hand, if we do break below 171.50, we then trigger this ranges extension, which theory would indicate that this is a 450 pip range. If we break below there, we should see a 450 pip extension to the downside, and that would bring us probably even lower than this symmetrical triangle support. Okay, so that's what I think about the Euro Kiwi, Son, since you asked about it. You think it's just a collateral issue? Jason is asking. Seems that the larger primary dealers are refusing to participate in repo. Stelio, that's Jason's comment. You have a great point. I'm 82 and do not have a degree, but made a good living on my own. Indicative, as long as the government stays out of the way. Yeah, Lowell, I mean, I'm 100% with you there. I'm 100% with you there. Unfortunately, we've seen that, usually what is good economics is bad politics, and what is good politics is bad economics. And that's the allure and the problem with socialism, is that socialists can easily claim a lot of things that when somebody listens to them, if they don't really understand how the economy works, they're going to be like, is there anybody against free education for universities? The initial response would be, no, sounds great, doesn't it? I mean, yeah, of course it sounds great, but until you see what the actual results are, because in effect, unfortunately, and that's how things work and how economics work, there is nothing more expensive in the world, nothing ever, than what a government wants to offer you for free. Nothing. You might be one of the lucky ones that don't end up paying the cost, but the society, as an entity, will end up paying a much higher cost in the end. Just to give you an idea, Greece has a public healthcare system, so you can go to any public hospital like for free, etc. It also has some very good private hospitals, right? Just to give you an idea, the government will end up paying for a gallbladder removal something like 9,000 euros per operation, while if you go to one of the best private hospitals, you'll end up paying roughly half that price. So people that will end up using the public health insurance, they're going to be like, okay, good, I got that operation. Yeah, the hospital is not that nice, and the room was not that good, etc. But at least I got it for free. No, you didn't get it for free. You actually got it at double the price that you would have to pay to go to a good private hospital, but you don't realize it because you paid over time through your taxes, and you didn't end up paying the hospital the moment you left the hospital having that operation. You said, oh, it was free. No, it wasn't free. It cost double the money, right? A good private school in Greece, not the best, but a good one, will cost something like 6,000 euros per year. And that's exactly how much the public system will end up paying for a kid in school in Greece. exactly that much. So, you know, the equivalent amount of money you would need to send your kid to a good private school, which, trust me, is a lot better. And still parents would say, you know, okay, public school, it's not that good, but it's for free. No, it's not for free. Grigori, I will have to disagree with you, mate. I went to a private school in Athens, and you're wrong. I can name a lot of schools you know that are roughly 6,000 euros. For example, Stelio, how's the school? What's the name of the school you send your kids?
Arsakio, six and a half thousand per year.
Yeah, Grigori, I know. I went to the American college. American college is roughly 13K. St. Catherine's as well, Moraitis as well, something like that. Those are the top tier schools, which are only 3. So you're right. There are 3 top tier schools, more than 10K per year, but everything else is roughly at 5 to 7K. Yeah.
Okay, I think we're just about done with time, right?
Yeah, actually, yes.
Our guest is here.
Okay. Perfect.
Jake is with us to show us their new charting technology. So stick around.
I'm looking forward to seeing that. Yeah, I remember Blake mentioning something yesterday, right?
Yep. So you know, this could be something to add to your arsenal. Okay, Jake, welcome to Face. I'm going to promote you. Probably haven't had a promotion in a while. So here you are. You're
that joke.
Tell
coach,
your boss. Huh?
That joke, coach, is getting a little bit old.
Hey, I bet you haven't. I'm just talking about me, Jake. Anyway, so I haven't had a promotion. I self-promote. Okay, let's see. Mute. Should be able to hear you. Jake, are you there? Unmute. Okay. How about now, Jake?
Yeah, can you hear me?
Yeah, we can hear him. Yeah.
Loud and clear. And to share,
perfectly.
There's a green box. There's
right.
a drop-down menu, and you could show your charts. And we're looking forward to seeing a new technical twist.
Yep, you got it.
Okay.
You guys
So Jake, yep. Nice to meet you.
Nice to meet you. Thank you guys for allowing me to jump on and talk a little bit about the markets. As much as I'd love to, you know, just give you guys all the features on TrendSpider, I'm not going to bore anybody with that. What I'm going to do is I'm just going to show you guys some of the main core features and how they've been useful over the last couple of days.
Okay, Jake, before you do that, can you tell us a little bit about how you got involved in the business, what your background was before you came to TrendSpider?
Sure. So my dad one day when I was like 12 years old said, "Hey, I want to give you an account to try to learn about the stock market." Wasn't a lot of money, but quickly blew up my account being, 12, 13 years old. And so that's how I started. In high school, I traded the financial crisis and was a little more successful with that. And really started my passion for technical analysis probably when I was 17 or 18.
Okay.
And so went to college.
What instruments, I'm curious, what instruments were you trading at 12 that you blew up your account?
I was only trading trends. So I mean,
options, equities, what were you trading?
Trade common stock.
Okay.
Yeah, it was so
penny stocks?
No, they were actually bigger stocks. So they were like, what did I buy? Energen back in the day, like I think it was ENG or something. I did buy a couple penny stocks. Of course, I went to high school and my friend is like, "Oh yeah, my dad's got like 1 million shares of this stock that's like 0.001 cents." I'm like, "Oh, what's that?" And so that's how I got introduced to pennies. But in high school when I was trading the financial crisis, I was trading bigger stocks, but back then they were penny stocks. So I was trading AIG Capital, I was trading Genworth Financial, XL Capital, all of those stocks that pretty much dropped from like $20 down $2 or less. That's what I was trading. And then finally, when I got 17 or 18, it was weird. I started looking at Yahoo message boards. That's kind of how I started to learn. Someone would be like, "Oh yeah, the RSI is below 30. I'm like, "What's the RSI?" And so I just went on Google and Googled it and kind of tried to teach myself what some of these things meant. And then one day it just kind of clicked. I'm like, wow, you can actually like kind of predict price action sometimes looking at the RSI when it's oversold and the price is down. So that's what captured my interest. And then, as I mentioned, to school, studied economics, and that really put some of the pieces together even more. And once I graduated college, I started with a startup out of Duke University doing biomedical sales. So it was a spectrometer that I was selling, and I had no idea in hell what the hell a spectrometer was. I'm like, there's no way I'm going to be able to do this successfully. And in the background, I started posting publicly on Yahoo Finance, got some good feedback, joined StockTwits, was able to gain a following pretty quickly. And I tried to monetize that. I did like a yearly subscription. And then from there, one of my subscribers introduced me to Dan, our founder, and I was brought on as a founding member about a year and a half ago.
I wish you nothing but success. Very good story, and could tell that you're a member of the mafia. You know, have you ever noticed, Jake, that once you get involved in trading, you could maybe try and leave it or do other things, but it's kind of like Hotel California. You could check out, but you could never leave.
100%. So
can you turn your volume up just a little bit, buddy?
Yeah.
A little more volume.
Let me get my mic and I'll just plug that in. It'll be much better.
Some of the attendees are saying low volume.
All right, no problem.
Okay, you there? No, we lost you. The volume's even lower. So you'll probably have to make an adjustment on, yeah, there you go, on what you're using. I guess I shouldn't have said anything. Jake? Okay, everyone. I don't know if he's going to be able to make it back. Too much dead air.
Hey, can you hear me now?
Oh, okay. Yeah, I was just about to give up. Okay,
yeah,
go.
I'm not sure what happened there. Can you hear me now?
Yeah.
Okay, cool.
So you need to share your screen again. I'll just tell Velu there's some dead air to edit out.
All right, can you guys see my screen again?
Yep.
Okay, cool. Sorry about that. I'm not sure what was wrong there. But yeah, so as you were mentioning, pretty much tried to take a break for 3 months or something just when I moved out to Denver, and quickly realized that the market's kind of just where I was meant to be.
Okay, so tell us about some of the new wrinkles in what TrendSpider is doing for traders.
Sure. So TrendSpider is, you can see here, kind of at the base, a charting platform. But really the functionality is made to help your process of technical analysis be more efficient. So even on this chart, you'll see a couple things. Some of these things I annotated just to look for an interesting pattern that is forming. But you can see here, these dashed lines are actually moving averages from the weekly chart. So without having to split my screen and see how the weekly candle looks versus where the, where the weekly moving averages are. I can just overlay these longer term moving averages on the daily chart, and you can see how the short term price action then reacts pretty well with these longer term levels.
Out of curiosity, what time periods do you use?
I usually am swing trading, but
no, I mean your moving averages. What are they?
Oh, yeah. So 20 for the SMA and then 50 for the EMA.
Okay.
And so you'll see.
Why did you choose those?
Just kind of testing them out over the years, and those are the ones that I generally like on SPY. And that's the thing, every stock has its own personality. So the 20 and the 50 may not necessarily act the same way on SPY as it does on Amazon or something like that. But the reason why I use these is you can see how the price action really respected this area in late September. And you can see how we broke down, bounced perfectly off the EMA 50 for like 4 days, tried to bounce to the upside, found hard resistance, and then broke down through the EMA 50. So, my question is, all right, well, my 2 daily moving averages have now broken down. I need to go to more of a top-down approach and see what the weekly moving averages are doing. And so without having to do anything, I just go to the W here, which stands for weekly, and I just switch these to on. And you can see once we broke down through that original EMA 50, look at where we caught a bid, right at the SMA 20 from the weekly chart. So you can see how these shorter term price levels are actually respecting these longer term moving averages very well. And so that's something that is really unique to TrendSpider, where you don't need to split your screen. You can have everything on the same screen. This is just a quick annotation that I did showing anytime the market's been near kind of all-time highs, retesting all-time highs, it generally will do this type of pattern where you've got a hard breakdown. You break down through the SMA and down to the EMA. You can see that here, 1. We bounce from the EMA almost to the SMA 20 here, which is 2, and then pulled back to retest the EMA. And this is back in 2018 when we just were crashing. But if you look back, every time we've done this, another test, new all-time high, breakdown, pop to the upside. In this case, the EMA 50 and the SMA 20, we're still kind of getting calibrated from this weird move here. But you can see once we finally kind of stabilized, same exact thing, new all-time high, breakdown, bounce off the EMA 50, retest to the SMA 20 from the weekly, and then back down. And so you can see here we've had the same thing, down move to the EMA 50, up to the SMA 20 on the weekly. And you can see today, this is a little bit delayed on the pre-market, but you'll see, we may be trying to retest this area. Who knows if we do or not? China news can easily move the market very quickly. So, but for now, it will be interesting to see if we have that same type of pattern retesting the EMA 50. So for me, the EMA 50 is what I call like the status quo line, where if we start breaking down through this area and close multiple days down below this area, that's going to be kind of a status quo changer, because we only did that once. And that was back in June. We quickly, within 5 days, just ripped right back up. So this is an important area to watch, and especially this area above, this kind of double top, and we'll just see kind of what happens.
So let me ask you, back when you broke down under that EMA, you have labeled 3. Was that a short signal? And then you got out the next day because it closed back above it?
So for me, no. I actually use the alpha.
Because there was no reason to cover down there based upon what you use.
I'll show you kind of why
on this chart.
This wasn't that bearish, because I use the Alpha Trends anchored VWAP. So I like to anchor the VWAP from important areas of support or pivot areas. Like in this case, we bottomed out on December 24th. And so Brian Shannon, lucky enough to learn from him firsthand. And one of the things he told me was, you need to anchor from important areas, like important reversals. So back on December 24th, or you could even do this one. I personally like to do this one. If I anchor the VWAP here, look at how perfectly the price action respected that area. So you can see, even though it broke down through the EMA 50, price action really needs to break down through this anchored VWAP here for it to really be a status quo changer. Notice
do you teach these things, Jake?
I personally used to in my subscription, but right now I'm on the business side for TrendSpider. But I'm obsessed with charts. I've been doing charts for a long time, and I just love to chart every day.
So how
right
do people
now,
learn how to how to use your product effectively?
So we do webinars every Sunday. So
Okay.
technically, I guess I do teach through that, but I
Okay.
don't have like a subscription service or anything that I'm teaching. I do all the teaching through the webinars on TrendSpider, and we have all types of videos as well. So you know, that's how you can kind of learn how to utilize all these different things. So for me, you know, if we did break down through the EMA 50, the Alpha Trends anchored VWAP would be the biggest thing that I'm watching here to break down. And the cool thing is, let's say that we did break down, started to, you know, move towards this area here. What I can do is I can actually create an alert on this line, this anchored VWAP, and I can increase or decrease the sensitivity here. So instead of the price action having to hit exactly right on this line,
cool.
I can give myself some margin of error rather
like
than
a band. You give it a, like, you know, instead of it being concrete, it's a mattress.
Exactly. It's more
You
of
like
a,
that?
yeah, no, I do.
You could use it.
All right. I'll have to get in
Okay.
contact.
It's not mine. I think it was Carter Worth on
Trademark.
CNBC. That support and resistance zones aren't just like concrete. They're more like a mattress. They have some give and take.
Yep, and this you could see this here, right? So on the EMA, let me just remove the view up here. But even on the EMA 50, right, in August, we never actually closed at this line. These were all wicks that barely got there. So what you can do is do the same thing on this area where back in August, you were able to capture these moves through this margin of error rather than having to say, all right, alert me when it hits this exact line. Because what happens is, you know, that wick may have happened so quickly you weren't able to catch it. So with our system, you can go in and say, all right, you know, I want to know when the price touches anywhere within this area. And I want to know whenever the 15-minute candle closes in this area. So you don't have to wait for the daily candle to close. You're able to capture that price action within the wick by using a smaller confirmation candle. So that means whenever the 15-minute candle closes here, you'll get that alert. You can get it through email or text. So it's another way to make things more efficient. The multi-time frame analysis is going to make your technical analysis more efficient from a kind of consolidating the chart perspective, where you're not having to have 3 or 4 different charts open. You've got all of your main levels on one chart, and it generally kind of keeps things a little less messy. But then on top of that, the alert system is there to really kind of capture these moves when you're not able to stare at the screen all day. And even if you are able to stare at the screen all day, you're only able to watch one stock efficiently if you've only got, you know, one chart open. You can have a ton of different screens, but you only have 2 sets of eyes. You can only watch so many things. So this is here to be a secondary perspective and a secondary set of eyes for you. So you don't have to watch the screen constantly. The system's doing it for you.
Nice.
One of the cool things I wanted to show you guys about IWM, this is a cool case study on the lower Bollinger Band. So you can see here, you know, the daily price action has respected these two weekly moving averages pretty well. But what the heck is causing this area down here to catch a bid? Well, I can go to the Bollinger Bands, and you'll see here when I turn on the weekly Bollinger Band, you can see how perfectly the shorter term price action, the daily candles, are respecting this band here. And so you can see here, finally on Thursday, we barely missed the band. And this is like your case study textbook example of when to use the alerts, because you can see here, if you guys can see when I zoom in, the wick actually never got to this lower band here.
Hear of the Jake? Ever hear of the Hands of Time?
Maybe.
That's a band I was in junior high.
Yeah. Nice.
Oh, you were talking bands.
All
right, go ahead, buddy.
These are, you may have been familiar with the lower bands then. They must have been
Yeah,
in the
garage bands.
yeah. But so that's an example here where you're able to kind of capture that margin of error. I'm having trouble moving this right now. But yeah, the point is you can kind of see how instead of having to hit that exact line, you've got this sensitivity, this
Yeah.
margin of error, and you'll see it's going to alert within 18 cents of the selected line. So it's really useful when you're doing other stuff. You may have a full-time job, you don't have time to look at the charts all day, but you do have the levels that you want to watch. And so it's kind of allowing the market to come to you and you defining your parameters that you want to be alerted when you get to a specific area, and the system will alert you, and then you know it's time to either trade it, sit on your hands, whatever the case may be. So it's really an interesting way to kind of do that. One thing that I wanted to show as well is something you guys have probably never seen before, and this is something that's completely unique to TrendSpider. It's something called, and what I did just now is I turned on the trends, so you can see all these trend lines are automatically popping up. But I'm going to turn these off for now and just draw my own just for this example. Let's draw this line to this line. And this was kind of a pretty obvious level everybody was watching back in mid-September. And what's really interesting about this is you can see these wicks were over the line, but we don't have much information about what the volume was doing around this line. So what I can do is I can go to raindrops, which is a completely new type of candle. And you can see here, it looks very different.
There we go.
Probably ever seen. The raindrops are a volume-based candle. So what you're able to do is you're able to actually capture some of the margin of error, or excuse me, not margin of error. You can capture some of the profile of the volume within these wicks that I just showed you guys. So in this case, I'll kind of decipher one to show you guys how it works. So if anyone's familiar with a bar chart, these are essentially just a volume-based bar chart. So you can see here when I lower the opacity, this looks just like a bar chart, except instead of this being the open and this being the close, this is the volume weighted average price for the first half of the period, and this is the volume weighted average price for the second half of the period. So you can see, you know, when the second half of the period's VWAP is lower than the first, it's red. You've got this. You've got a green one when the left side VWAP is lower than the right side. So whenever that second half of the period is higher, you've got green. And then you've got a blue raindrop, which is when the VWAP for the first half of the period and the second half of the period equal each other. And so that's something that I'll go into briefly in a second, but it's really an indicator for volatility.
Does it give you a size of volume?
It does not. It just gives you the volume flow. So if you turned on the actual just volume bar down here, you'd be able to see, okay, we've got an uptick in volume here, and this is how that volume was flowing throughout the period.
Okay.
So the cool thing about this is there's a second part to this. We just went over the different bars and what those mean. They're essentially volume weighted. But what you can also do is what I'm doing is increasing the body opacity, meaning we're showing the actual volume profile on the bars here. So what you can do is, let me just get rid of the volume here. What you can do is you can see when we finally broke out through this line, the first time we broke out, there was barely any volume. So this little squiggly line here is the volume profile for the first half of the period. So it's no different than any other candle. The low here is the low of the day. The high is the high of the day. And then you can see where that volume has been kind of allocated throughout the price range during the left side, which is the first half of the period. So during the first half of the period, we can see most of that volume was centered right in the middle of this price action. We had very slight volume breaking up through this trend line. So we can see there wasn't a lot of conviction by the buyers. And then during the second half of the period, there was no volume at all above that trend line. And we know that because this is flat. So if there was any volume during the second half of the period, you would have seen some type of volume profile here. However, the volume profile is focused below the trend line. During the second day, you can see we tried to break through it, but there still wasn't a ton of volume above that line. And then you can see the conviction just wasn't really there by the buyers. And then we went straight back down to the lower weekly Bollinger Band. So this is a way to kind of see if breakouts or breakdowns are real. Another cool example of this is on QQQ back in October. And you can see this here where we had this very defined downtrend. And you had the same type of deal. You had kind of right here, you had this third time testing this area, and it looks pretty much exactly how the IWM looked. You had a little bit of volume above the line, but most of that volume was focused below the trend line, and then you had a hard move down.
I have a couple questions from viewers. Can you set a minimum volume for the profile? Scott would like to know.
A minimum volume meaning only show me volume above X amount?
Certain number, yeah.
No, not right now.
You can't customize it. Okay, can you use an anchored VWAP?
Oh, yes, absolutely. So one of the cool things to do is anchoring the VWAP from a blue raindrop. So for example, if we went to, like, let's say Google, this is something I use the anchored VWAP on a lot. You can see here, what I sometimes will do is I'll anchor the VWAP from the last two blue raindrops, since those are like the two true equilibrium prices that have occurred in the last X amount of days. And I started anchoring the VWAP, I think, around here or something. So none of this price action was there yet. So, but what I do is if I anchor it from the last two raindrops, you'll see how nicely the price action will respect this. And then Brian Shannon, as I mentioned, likes to anchor from status quo changing points. So this is another one I'd anchor from, just being a gap up. And then you can see how nicely the price action respected this area as resistance, finally gapped above it, found support, and then kind of respected this area for quite some time. So you can anchor the VWAP from these areas. It's just kind of finding what works for you. The blue raindrop is not something that I would always just go to anchor from, but there are some really cool examples of this being very robust as far as catching some interesting areas. This is the same thing. What I did was I anchored the VWAP from here on March 19th and from here on the 24th. These were the last two blue raindrops. And you can see as time went by how beautifully the price action found support right on these two lines. And then finally, the downtrend started once we broke through those two lines. What I did here was I just anchored the VWAP again on the blue raindrop. And you can see how well the price action has respected that area. We bounced right up to this area, found hard resistance. Here, the price kind of just kind of jumping around it. And then finally, we broke down again. So for me, the first area I'd look at is the anchored VWAP here and create the alert and that type of thing. So you can see here.
Jake, can you use TrendSpider on crypto and FX?
Yes, you can.
Okay, yep. There you go, Gregarios.
So Euro USD, I haven't looked at it in a while, but one of the cool things about this is if I just delete everything, you're able to actually have the system look at trend lines for you. So if I turn on the trend line feature here, you'll see all of these different areas that are popping up. So this isn't necessarily like to replace your technical analysis. It's essentially giving you a permutation of a bunch of lines, and then you're able to kind of see, what your perspective is. So for example, there can be all different types of perspectives here. You can have, this bigger channel here that you can capture, and then this shorter term channel. So it's a way to kind of show you different ideas rather than just replacing what you're doing by hand.
Okay, wow, very interesting, Jake, and a work in progress, I'm sure, as always, and raindrops, new terminology for me. So if you'd like right now, you could show your website, and if people are interested in pursuing this, how they can reach you besides your Twitter handle @TrendSpider with an I, not a Y.
Yes. Yep. So you can reach me at jake@trendspider.com if you have any questions. My Twitter handle is trendspiderjake. So if you did want to just send me a DM, or you can send us a DM on our actual Twitter handle, TrendSpider. Yeah, if you guys have any questions, please feel free to reach out. This is the website, so trendspider.com. You can go to the product page and check out all of the different features. So we have, the back tester, we have multi-factor alerts, being able to code in conditions without actually having to code anything in. So we have a visual interface rather than like a Pine script or a Python model where you actually have to know how to code. You just have to know your conditions, and then you can create the logic very easily. Our pricing page is here. So we have a ton of different plans. We have a ton of different pricing models where you can choose monthly or yearly. Yearly, you're going to save up to possibly 35% depending on whatever plan you use. And it's as you mentioned, we're still very much a small startup. So what you see on the platform is constantly being upgraded and updated. And we have a ton more features coming.
Okay, well, Jake, I want to thank you for coming here and showing some really unique things. Makes me think like when the S&P top is finally in, that you might have a theme song you could consider using for your company. Raindrops keep falling on my head. Okay.
Absolutely. No, it's a real thing, especially blue raindrops. Make sure to check out the blue raindrops because they can be very interesting in those hard levels of support.
Okay, and if you sign up for a year, Jake, they also send out an umbrella just in case you misread a few raindrops. And Jake, I wish you and your partners prosperity. And I think that anything you can do to edify and help people trade, it's probably also a good product for a beginner to get different pictures from your automatic trend line feature that they may not be able to visualize. It takes a while, a lot of screen time. So wish you nothing but success, my trading warrior brother.
Thank you so much. Thank you for having me, and hope we can do this again.
All right, Jake. Good hunting. Everyone, you could find Jake on Twitter at TrendSpider, TrendSpider. Hope everyone had a good turnaround Tuesday. See everyone tomorrow for Yom Kippur. I will be here. Adios. And remember, don't just count your raindrops or your pips, count your blessings. Adios. See you, Jake.